Hi everyone, I'm Aileen. Here I will explain how to do accounting records in service companies. Accounting is a process of recording, classifying, summarizing, and communicating various business transactions of a company. That way it allows for an assessment, analysis, and users can make decisions. Well, service companies are companies that provide services to consumers, so it can be concluded that service company accounting is a system of recording, classifying, and analyzing various financial transactions that occur in service companies to be reported later in the form of financial reports. Transactions recorded are transactions that affect the company's finances. Accounting will not record transactions that have nothing to do with finance. Transaction analysis recording classification. The first stage in the service company accounting stage is to collect valid, accurate, and accountable financial data. Examples include purchase notes, sales receipts, and so on. Then record all financial transactions in detail in the general journal based on the data collected, because it will be easier if you record it for the next stage. After that, transfer the data from the general journal to the general ledger. Classify financial transaction data by type of transaction, date, account number and name, and so on. That way, all company transactions in cash-related journals will be entered in one cash ledger. Then, calculate the balance of each account in the general ledger to find out the total value of the account. The second, trial balance. The next accounting activity is to make a trial balance to assess the process of recording data from the general journal to the general ledger. Posting is correct by making a trial balance. If the debit and credit amounts are balanced, then there are no errors in data input. The third, adjustment journal. The third stage is the preparation of adjusting journals that are made when transactions occur that affect the company's accounts. For example, depreciation of equipment and paid rent, and so on. In this third stage, new accounts will usually appear after adjusting entries are made. Fourth, the column balance. Ideally, the preparation of a worksheet will refer to a trial balance and adjusting entries. If you have made both, then preparing a worksheet can be done easily. Later, the worksheet that you make will provide information in the form of a profit and loss statement and balance sheet. Both of these will form the basis for preparing financial reports later. The fifth, financial statements. Financial statements are the fifth stage of the service company accounting cycle, which includes income statements, balance sheets, and reports on changes in capital. In the profit and loss financial report, all incoming costs incurred by the company will be calculated to find out the profit or loss obtained. Meanwhile, the balance sheet will display all of the company's finances from the asset and debt sectors and capital. The capital change report and income statement that you have made will be closed. These accounts include revenue, costs and expenses, profit and loss, and private accounts. Each of these account estimates that are closed will have a balance of so that only the estimated accounts that affect the balance sheet will have balances. The reversal stage of several accounts that have been closed to restore their balances. A reverse estimate account is usually a payment that was paid in advance and is not yet due. Yes, final or beginning balance sheet after closing. This stage is called the final or initial balance sheet because as the final balance sheet is produced at the end of the period, it is called the initial balance sheet because it will be used as the initial balance sheet in the next period's accounting cycle. So, those are the steps taken to carry out accounting records at service companies, and each record is made by you to provide financial information to the company concerned.